Hello traders, investors, and cryptocurrency enthusiasts. Welcome to our channel where we bring you the most relevant news, in-depth analyses, and realistic projections about the digital currency universe. Today we'll be discussing one of the hottest topics in the crypto market right now. The world of cryptocurrencies is turning its attention to a specific date on the global financial calendar, September 17th, 2024. All because on that date, Jerome Powell, Chairman of the Federal Reserve Fed of the United States, will deliver a highly anticipated speech about the future of U.S. monetary policy. This presentation is far more than just another routine statement. It carries the potential to trigger a new wave of appreciation in the digital asset marketer. Conversely, prolong the current period of caution and consolidation. The expectation centers primarily on one key issue: an interest rate cut. After years of monetary tightening initiated in 2022 to combat runaway inflation, the Fed appears poised to shift course. Recent economic indicators, such as weaker employment data, slowing inflation, and GDP growth below expectations, that the high interest rate cycle may be coming to an end. And this has direct and profound implications for Bitcoin. Lower interest rates equals more liquidity equals higher demand for Bitcoin. The relationship between Federal Reserve decisions and Bitcoin's performance is not speculative, based on solid, historical patterns. When the Fed cuts interest rates, the cost of money decreases, making credit more accessible and encouraging market leverage. As a result, there is a significant increase in global liquidity. And a substantial portion of this new capital seeks higher-risk assets, exactly where Bitcoin fits in. Whenever there's an increase in the money supply, Bitcoin tends to be one of the primary destinations for that flow, says Carmelo, renowned economist and expert in macroeconomics applied to cryptocurrencies. BTC functions as a scarce store of value asset, similar to gold, but with digital characteristics that make it more efficient in inflationary and monetary expansion environments. Historically, after interest rate cuts, we see an acceleration in Bitcoin prices with a short lag of 2 to 6 months. This view is widely shared by traditional institutions now operating in the crypto space. Reports from Coinbase Institutional have already highlighted that, even before any official decision, the market is pricing in a scenario of lower interest rates. There is room for multiple cuts through the end of 2025, stated the exchange's analysis team in its latest report. If the Fed confirms this trajectory, the impact on Bitcoin will be profoundly positive,
especially considering its program's scarcity and growing adoption by pension funds and central banks.
Market sentiment: 87% chance of a rate cut. While analysts debate, the market is already placing its bets. Decentralized prediction platforms like Polymarket have become precise thermometers of collective sentiment. To date, users on this platform assign approximately an 87% probability of a 25 basis point cut in the federal funds rate during the next meeting of the FOMC Federal Open Market Committee. This number reveals something crucial. Most market participants are already operating under the assumption that monetary easing is imminent, but optimism goes further. Some traders are positioning their bets for an even more aggressive cut of 50 basis points if economic data continues to show weakness. A recent report from Bloomberg, authored by journalists Janelle Mart and Katerina Sareva, reinforces this possibility. According to the document, futures markets are already pricing in up to 3 rate cuts by December 2024, totaling 75 basis points. This reflects a significant shift in the FAD's stance, driven by the need to avoid a deep recession. These anticipatory moves are common in financial markets, but gain extra strength in the crypto universe, where volatility often amplifies reactions. A single ambiguous comment from Powell could generate waves of buying or selling within minutes. Why is September 17th so important? September 17th is not just the date of a central bank technical meeting. It is both symbolic and practical. First, because it marks the end of a long waiting period. Second, because Powell has the power to shape expectations. His communication is analyzed word by word. Phrases like data-dependent, gradual easing, or pause and tightening can signal the beginning of a new cycle. If he explicitly states that a rate cut is on the table, or highly likely, the effect will be immediate. Markets will react strongly, and Bitcoin could surge toward new all-time highs. On the other hand, if Powell adopts a more cautious tone emphasizing persistent inflation, A strong labor market or geopolitical risk sentiment could quickly reverse. In that scenario, BTC might retreat to test support levels around $95,000, especially if there are automatic sell-offs in futures contracts. Bitcoin's role as a barometer of financial confidence. More than just a cryptocurrency, Bitcoin has consolidated its position as a leading indicator of global financial system health. When there is a perception of monetary instability, lack of confidence in fiat currencies, or excessive stimulus, BTC attracts capital. Today, it is seen by major players as a safe alternative digital version of gold. But with technological advantages such as global portability, divisibility, and inflation protection via a fixed supply of 21 million units. Moreover, the institutional landscape has changed radically since the previous cycle. In 2024, Bitcoin benefits from exchange-traded funds ETFs listed in the US, approved by the SEC, adoption by major corporations such as MicroStrategy and Tesla, integration with global payment systems including Visa and MasterCard, growing interest from central banks and governments in using blockchain for issuing digital currencies, CBDCs. All of this increases Bitcoin's resilience against external shocks and strengthens its position as a strategic long-term asset. Post-September 17th scenarios. What to expect? Based on current analyses, we can outline 3 plausible scenarios for Bitcoin's behavior following the announcement. Optimistic scenario, 25 or 50 BPs cut. Immediate bullish reaction, breaking through the $110,000 resistance. Massive inflow of institutional capital and leverage in derivatives. Price projection reaching $130,000 to $150,000 by the end of 2024, strengthening of the DeFi and Web3 ecosystem with increased total value locked TVL. Neutral scenario signals future cut, but no immediate action. Sideways movement, with BTC oscillating between $100,000 and $115,000. Continued accumulation by whales and ETFs. Expectation of a cut in November or December keeps optimism under control. Preparation for a stronger move in the following year. Negative scenario, hawkish tone, maintenance of high rates, rapid drop to $95,000. With a possible test of $85,000 in case of mass liquidations. Pullback in the altcoin market, which depends directly on BTC momentum. Delay in the next phase of institutional adoption. Prolonged consolidation period, similar to what was seen in 2019 to 2020. Experts warn, prepare for volatility. Despite widespread optimism, experts like Cami Russo, founder of The Defiant, warn of the risks. The market is overbought in terms of expectations. If Powell doesn't deliver what the market wants, the correction could be violent. Bitcoin is not immune to sell the news. Similarly, Georgios Konstantopoulos, CTO of Layer Zero Labs, reminds us that cryptocurrencies are global risk assets. They reflect risk appetite, and nothing influences that more than US monetary policy. September 17th isn't just a date on the calendar, it's a systemic event. Conclusion. The decisive moment is approaching. September 17th, 2024 could go down in history as the starting point of a new Bitcoin supercycle. The convergence of factors expanding global liquidity, consolidated institutional adoption, programmed scarcity, and a compelling store value narrative creates a favorable environment for historic appreciation. However, everything hinges on one person, Jerome Powell. His words will carry the weight of trillions of dollars in capital movement. For investors, the message is clear. Be prepared, have a defined strategy, and understand that regardless of the outcome, Bitcoin will remain one of the most transformative assets of the 21st century. The countdown has begun. The world is watching, and Bitcoin observes.